Okay, so good morning everyone here in Dubai and to all of you that are following us online. We are very happy to be here in this that is the last side event at the Benelux CIB Pavilion at COP28. So we are hoping to give you Luxembourgish contribution to a positive and hopeful end to these climate days in Dubai. So the session will highlight the role of the financial inclusion sector in supporting low-income and vulnerable populations to cope with and adapt to climate change effects through its social and green agenda. The speakers in the session represent organizations based in Luxembourg, an international financial inclusion hub, which receives strong support from the government of Luxembourg and particularly from the Ministry of Foreign and European Affairs and the Ministry of Finance. So my name is Joana Afonso. I'm financial inclusion specialist at the European Microfinance Platform and board member of the SPTF, the Social Performance Task Force. And I have here with me Mathilde Boin, Head of Knowledge Management at ADA. Then we have Michele Grosso, board member of the Microinsurance Network and co-founder and CEO of Democrats. And to the left, Jesper Persson, head of co-financing and partnerships at EIB Global, the development branch of the European Investment Bank. So I'll give them the word in a few minutes to present themselves and to talk a bit about what their organizations do in inclusive finance and particularly in the green inclusive finance area. But I'd like to give you first an overview of the agenda of the session. And so we will start with this round of presentations from all the speakers here. And then I will give you a quick overview and a context setting up of the inclusive finance sector and what is the social and green agenda and why it is important. And then we will have a panel discussion with the three panelists discussing critical factors to mainstream green in the inclusive finance sector and how to partner within and beyond the sector. And we will finalize with questions and answers if we have questions in the room, and final remarks from the presenters, from all the speakers. And so, to start, I will start with presenting you a bit of what the European Microfinance Platform does. So we are a multi-stakeholder platform that was created in 2006 with the support of the government of Luxembourg. And the network has around 120 members from 25 countries. It was initially created to gather the European-based stakeholders working in financial inclusion in the developing countries, but it has grown to host also institutions from all around the world, including the United States, Canada, but also from some countries in the south. So the main objective of the network is to promote networking, to foster collaborations and learning experiences, and to, on this process, contribute to the creation and sharing of knowledge on inclusive finance. And in this session today, we are going to share with you what has been done in green inclusive finance. So we do this through a number of activities that you can see in the screen and in the slide. We have a flagship event that probably some of you that are watching us online have been to, which is the European Microfinance Week, every year in November. We have also the organization of an European Microfinance Award on a specific topic that rewards financial institutions and other organizations that work in the sphere of financial inclusion and that work in a particular topic that is the topic of the award in each year. We had already 2 topics around green inclusive finance in 2014 and 2019, and this award is organized in collaboration and with the Ministry of Foreign and European Affairs of Luxembourg and in FINE, the Inclusive Finance Network of Luxembourg. But talking specifically about green inclusive finance, I think what I would like to highlight is our action group work. We have since 2013 a specific action group dedicated to green inclusive finance, that is the Green Inclusive and Climate Smart Finance Action Group, and they have been growing steadily since a few members in 2013 to around 150 members now, with more than 85 organizations represented, and it has really become a think tank on green inclusive finance, contributing to creation of knowledge, but also development of practical tools that can support the financial institutions in developing this work. So I will stop here and pass the word to Mathilde to talk us a bit about ADA.
Yes, thank you, Joanna. First of all, hello everyone. I'm glad to be here in Dubai to present our experience in green inclusive finance in the framework of this very important event. So, a few words about ADA. ADA is a development NGO based in Luxembourg. So we are also financed by the Ministry of Foreign Affairs in Luxembourg. And it means that we are not microfinance institutions, as some people sometimes think. We are a development NGO just as other NGOs. But indeed, our core objective is to foster the development of what we call now inclusive finance in developing countries. So maybe just to clarify for the people who are not very aware of the difference between microfinance, inclusive finance. So now we talk about inclusive finance because the financial services offered are offered by various actors beyond microfinance institutions, including fintechs, including insurance brokers, and we have some of them with us today. So the variety of financial services and of actors offering these services is much broader than in the past. That's why we talk about inclusive finance. So to talk about our work, what we do exactly, so our objective is to make sure there are financial services adapted to vulnerable populations in developing countries, and for that we work not directly with these populations, but with local partners in the field, so mainly financial institutions, but not only. And we provide these local actors with technical support first, technical assistance, and grants to make them able to develop these new financial services. So this is our core activity, but we are also advising an external investment fund which invests in microfinance institutions or inclusive finance institutions, as we call them now. And we make sure we are able to share knowledge, to share best practices with other actors in the sector. So that's why we have this knowledge management team and these knowledge sharing activities. You can see a few key figures about ADA just to give you an idea of our outreach. So for instance, last year we worked directly with more than 200 local organizations in the field to offer financial and complementary non-financial services. I will talk a bit more about that later, to more than 250,000 people in our countries of interventions. And we are about 45, 50 staff members, all based in Luxembourg, or almost all based in Luxembourg. We can show the second slide, just to give you an idea of our geographic outreach. So we work in the 3 regions in Sub-Saharan Africa, Latin America, and Asia, again with these local institutions to develop, especially here what is mentioned is green inclusive finance products. So just to give you an idea of what are these green inclusive finance products, ADA works mainly on the development of credits with these financial institutions. So credits to make sure people are able to acquire energy efficient or equipment functioning with renewable energy, for instance, or loans to make people able to adopt sustainable practices in agriculture, which require specific credit characteristics. Another example is climate resilient housing loans. So it means the loans are dedicated to the improvement of housing to make it more energy efficient and more resistant to climate shocks. These are a few examples of green inclusive finance products we contribute to develop. Another one is agricultural index insurance, but we have another actor with us today which will be more able to talk about it, so I won't tell more about that right now. And I think I'll stop here and I'll let the others introduce their activities.
Thank you, Mathilde. I will ask Jasper to introduce now because we have your video ready after. So if you can present, do you want me to start the video or?
Say something afterwards, yes.
Mi nombre es Héctor Manuel Valdés, me dedico a la ganadería de leche y carne. Tengo 80 cabezas de vaca. La sequía muchas veces nos maltrata. Algunas veces tenemos que trasladarnos hacia afuera cuando cortan los arroces con los ganados, por los trabajos que pasamos por la sequía. Nos meten algunas veces en unos 5 y 6 meses de seca, sin ver agua. Anterior yo tenía 2 bombas, una que me bombeaba de la presa hacia el reservoir. Tenía un costo más o menos de 60 galones de gasol al mes. Usted se pone a calcular, es un gasto bastante fuerte para la producción que uno tiene. Los paneles con el sol, cuando el sol sale, le mete energía a la bomba y la bomba incluso de una vez empuja el agua hacia afuera. Eso no tiene contaminación, no tiene ningún problema. Yo vengo a la finca y nada más tengo que cambiar el agua. Es muy diferente. Las vacas se mantienen más felices, toman buena agua y comen una hierba verde saludable.
Yes, I mean, this is just a concrete example of one of the many operations that we have and how we help one small farm, a hectare, with a green and inclusive loan. So maybe on a bigger scale, just a few words about EIB and EIB Global. So we are the EU bank, the EU's climate bank, owned by the member states. And we do about 70 billion per year in lending. And a large portion of that is climate finance related. And we're one of the world's largest providers of climate finance. And very ambitious goals. We created what we call the Climate Bank Roadmap back in 2020, and it runs between 2021 and 2025. And as part of that roadmap, we set ourselves the target that by 2025, 50% of what we do, what we lend to, should be climate finance or environmental sustainability. We've also set the target to support 1 trillion of investments into green and sustainable areas by the end of this critical decade, 2030. And we are fully aligned with the principles and goals of the Paris Agreement. And we have invented the green bond market, or pioneered the green bond market, if not invented. So climate is really, green and inclusive finance is really in our DNA. So I think as by way of introduction and introducing the EIB, and I think stop there. Thank you.
Thank you, Jasper. And then Miguel, last but not least. talk us about the min and.
With pleasure. And thank you so much for having me here. My name is Michele, and I wear two hats today. So on one end, I am a board member of the microinsurance network. And I'll tell you more about me in a second. I'm also the CEO of Democrans. Democrans is an insurance technology whose mission, shown as the name suggests, is to democratize insurance, which means to make insurance accessible to people across emerging markets, across all income levels. Now, I'll tell you more about the min. So the min was born to solve a global problem, which is that of the 5.4 billion people across, which we name emerging consumers. So those individual earnings from $2 to $20 a day. Out of those, only 400 million have some sort of insurance or social protection, and that is not a problem per se. I mean, if something happened, to all of us here in this room, we have our families, we have our governments, we have our savings, we have our employers. If something happens to them, the insurance could really be life savings. So, and this leaves 5 billion people around the world who are actually uninsured, and that is two-thirds of the world, actually. If we move on to the next slide. So the microinsurance network, it was born to solve this problem. We are a non-profit association of organizations and individuals who are committed to building a world where people of all income levels are more resilient and less vulnerable to daily and catastrophic risk. Together, the microinsurance network comprehends more than 500 individual and institutional members from 7 countries across all the insurance value chain. To tackle this big problem of microinsurance, you cannot have only one actor. You need to have collaborations among all these actors to my left. So and that includes insurance companies, reinsurance companies, it includes donors, it includes universities and think tanks, it includes insurtechs, it includes the distribution partners. And if we move on to the last slide, please. So what we actually do at the Min, we provide capacity building in terms of best practices groups and scholarship. We publish a lot of market intelligence in the form of landscape studies and briefing papers. But overall, we're really a platform for advocacy and dialogue internally among our members, but also externally. And because we represent such a diverse group of people, networking is really at the base to be able to do something. We also have a flagship event, which is the International Conference on Inclusive Insurance, which happens every year. It just happened end of October in Ghana. Next year it will be in Nepal, and we hope to have you there. And we also have other internal and external events.
Thank you, Michele. And so I think we are going to pass to the second part of the agenda, which is to give you a brief overview about the sector. Why is it important for the sector to be here, and to share with you what is happening in social and with the social and green agenda, and what are the the challenges ahead for the inclusive finance sector as well. And so I will start to say that, as probably you have heard a lot during these 2 weeks at the COP, vulnerable populations and low-income populations are the most affected by the climate change and the ones with less resources to cope with its effects. And these are exactly the populations that the financial inclusion sector has been working with since its origins, since it was created in the 70s, that financial service providers and institutions working in financial inclusion work with women, youth, forcibly displaced people, informal, self-employed, and smallholder farmers. And what the sector has achieved in terms of outreach to these populations is enormous. And in several countries, the outreach is of several millions of people being served by financial institutions. And microfinance institutions and financial service providers are present across the world, including developed countries, as the MicroLux case in Luxembourg. And besides the outreach, which is already a big part of why the sector is important in here, is also the way financial service providers relate with the clients. And there is this culture based on proximity and based on building a trust relation with the clients that makes the institutions to be in a very privileged position to actually understand and to be very aware of what are the needs and what are the challenges that these populations in particular have. And these challenges are also related to how they face the climate change challenges. This makes the sector also in a very privileged position to be able to raise awareness and provide training. And what I think is the most distinctive and what is really makes the difference for the sector is this really pull approach that FSPs have to clients and their needs. So they aim to offer accessible and affordable financial inclusion products, but also green solutions, but that correspond to what the clients want and need. So it's really very much a demand-driven approach, and an approach that is very suitable to find the best adaptation strategies at local level and implement strategies that actually correspond to the needs of the clients. But this is not the only reason why financial service providers work on green and develop a green strategy. The consequences of climate change for the financial inclusion sector go beyond the social impacts at the client level, because if the climate change effects endanger the businesses that the clients develop and their sources of income, there will be an impact on repayment rates of the institution, potentially leading to situations of client over-indebtedness, and that will put in danger the portfolio performance and the long-term sustainability of the institution themselves. There is also the social side, which for these institutions that have a strong social mission will be in danger and also put in risk if climate change effects are not dealt with and clients are not resilient to be able to deal with them. And finally, something that needs to be considered is that with effects of climate change increasing significantly, and with all the ecosystem trying to adapt to these consequences, there are new regulations, there are new products being developed, there are new needs that imply that financial service providers and all the institutions working on financial inclusion need to be able to adapt, and this includes transition costs for the institutions themselves. So, talking about why we talk about social and green agenda and why we put that on the title of the session, going back to the origins of the financial inclusion sector, social objectives have always been at the core of the sector. But today, it is irresponsible to think about pushing social objectives without considering the effects of climate change. And on the other side, it is also not reasonable to think of a green transition without considering the social and economic implications of adaptation strategies. So we see these two components coming side to side and needing to be considered jointly. Due to the double bottom line and now triple bottom line, considering financial, social, and environmental objectives of the sector, there is always a pursuit of this broad goal of increasing resilience of the clients to external shocks. This might be a medical emergency or a political conflict, but each time more, there are also the consequences of natural and climate disasters. And thus, this response to external shocks and increasing resilience of the clients was something always present, but that for which the response has been traditional financial products. So emergency loans, savings programs, traditional microinsurance. There hasn't been, or there wasn't for a long time, a real green strategy and the idea of developing specific products for this. And despite not having this mainstream green strategy, the sector started looking into green about a decade ago. With a few actors, some of them members of the European Microfinance Platform that in 2013 created an action group on microfinance and environment, where ADA was one of the pioneer members, but also, for example, Alterfin from Belgium or FMO from the Netherlands. And at the same time, several institutions, including UN institutions, started developing pilot projects to try to understand what would be this of developing specific green products. And we can talk about, for example, MEBA, the microfinance for ecosystem-based adaptation, or Clean Start, a project on clean energy developed by UNCDF. MEBA was developed by UNEP since 2012. And with this, during this period, there was initial initiatives to raise awareness, to do specific trainings on green inclusive finance, also to try to understand what are the green financial and non-financial products that the sector can offer. And for example, in 2014-15, with Microenergy International, the action group cataloged a series of products on energy that could be offered, and also trying to develop what could be a framework to assess environmental performance, so that institutions can have a proper framework and also guidelines to understand how to implement their strategy and how to measure. And for that, in 2014, the Green Index was created by the Action Group, and it has been updated several times. And in 2022, it was updated to its 3.0 version, and at the same time, it was co-developed a dimension on environmental performance of the Universal Standards for Social and Environmental Performance Management, a framework that is a guideline and a reference in the sector developed by the Social Performance Task Force to evaluate social performance, and then that from 2022 includes a component also on the environmental side. So just to highlight the three key concepts, because these will be linking to what the three speakers are going to talk after, when we talk about green inclusive finance and the sector green agenda, we are talking first about both clients and institutions. And we are talking about adverse impact, so the impacts of both clients and institutions on environments. And while the traditional approach was of a no harm to the environment, now we can see each time more that institutions are trying to have a proactive approach and try not just not to do harm, but also to protect and to care about the environment. Then we have the vulnerability, which is what we talk about when talking about the effects of climate change in clients and institutions and all the impacts that these have at all levels. And a very important third concept is the economic opportunities. As I was mentioning before, we are not talking just about increasing resilience. We are also talking about a new range of products that has been developed, new segments, new markets that constitute opportunities for the institutions, for the financial institutions, but also for the clients, because there are new activities related to implementation of green solutions that can be actually potential new businesses for the clients of the microfinance institutions. And for example, recycling activities is a very typical example of a new activity that has been developed. Just to finish up, I would like to say that, so the sector has already very good examples. It has lessons, important lessons from some of the projects I've mentioned, pilot projects before. The sector has also a very strong basis in terms of identifying needs, understanding the challenges of the clients, applying a client-centric approach to the design of these products, and to have a framework that allows to monitor and evaluate exactly what's been achieved. The sector has always an enormous potential in terms of adaptation strategies because of the demand-driven approach that I've mentioned before, and the close proximity that they have, that institutions have with the clients. But, and that's where our speakers are going to come in, this is not enough. It's not mainstream at all. It's still something that needs to be embedded in the culture and in the daily activities of the institutions. And so we will be talking probably in the next part about how to close the information gap. And we have, for example, this project, the Green Map that you have here, the symbol, is an attempt to do this because it's a way of profiling good examples and what is being doing in the sector. And this is a project of the Green Inclusive and Climate Smart Finance Action Group that was supported by the Ministry of Foreign and European Affairs of Luxembourg. But we need to continue raise awareness, changing mindsets and thinking strategically about green inclusive finance. We need to continue build capacity, and something that was mentioned several times, and I think in all the sessions I've been at COP, we need to develop partnerships, and these need to be multidisciplinary, multi-sector, multi-stakeholder. And I think I've launched a few things to talk about by our speakers. So I will probably just pass the word to them. And Mathilde, I would start with you. So I'd like to ask you, ADA works directly with FSPs and with clients. How does green inclusive finance fit in the social mission of the institutions? Do you see them as a perfect complement, or are these competitive goals?
Thank you, Joanna, for the question. Even if you already gave a lot of thoughts to think about to answer this question, actually. But yeah, so very easily we can say that indeed it's a bit obvious, at least in principle and in theory, that the green objective of financial inclusion is complementary to the social agenda. You told it already, but the clients of microfinance institutions, of inclusive finance institutions, are vulnerable people who are traditionally excluded from the traditional banking sector because they have limited revenue, irregular revenue, their activity is part of the informal sector. So they are among the most vulnerable people, and they are also the most vulnerable to climate change. So, as you said, it's a bit obvious that the green objective should be complementary to the social objective. Financial institutions should not have any other choice than taking into account the climate risks faced by their clients. Very concretely, we work with a lot of financial institutions developing loans for agriculture, and it's very clear now that clients working in agriculture are affected directly by climate shocks. So their economic activity is changing right now, and the financial products they need to manage their economic activity should be a bit different as well. And we will give concrete examples a bit later, I think, on this topic. And so, for some financial institutions, indeed, it's obvious for them that developing green financial products is part of their social mission. They see it as part of their social mission. We have a current project with financial institutions in the Philippines right now, which decided to get involved in the development of green financial products because they see the consequences of climate change on their clients, and they wanted to do something about it. And they wanted to do something about it because they are very strongly socially committed. So for them, it's part of their social mission. But as you said, it's not, green inclusive finance is not mainstream yet. Even if some financial institutions develop these green products, it remains a niche in their portfolio for now. So it's not so obvious for all financial institutions that it's part of their social mission. For instance, still in the same project in the Philippines, several institutions decided to get involved in this project, but it was just before COVID crisis, and finally the COVID crisis occurred, and one of the institutions decided not to get involved in the development of green products anymore because they had other more urgent things to manage. So even if some of them see it as part of their social mission, sometimes it's not a priority in the agenda because there are other urgent crises to manage, and maybe crises which have more direct consequences that financial institutions can see compared to climate change effects. Some of them see the concrete effects, some of them don't see them, and we'll talk a bit more about it later. Another aspect to take into account, which tends to lead to the idea that it's not so complementary, the green and social objective, is the fact that we had a debate on this topic during the last African Microfinance Week with various public actors representing governments or policymakers. And actually, these public actors sometimes consider that they have to choose between socio-economic development and, let's say, eco-friendly or climate-friendly development. These public actors have limited resources, and sometimes they see investments in socio-economic development as being able to have more concrete and direct short-term effects, positive effects for the populations, compared to investments in the green economy or climate-friendly interventions. So, sometimes they consider that they have to choose, but as you said, the reality is that climate change effects are already here, and that populations are now aware of these climate change effects. So the two objectives should not be seen as so opposed by public actors. And anyway, the transition to a greener economy is happening right now. We discussed during this event that there are not enough investments in renewable energy, for instance, especially in developing countries, but still, these investments are happening right now. The transition is happening right now. And actually, the risk is to let some people behind this transition if we don't consider both these objectives as interlinked. There is a risk of a two-speed development if we consider that investing in climate-friendly or eco-friendly economy is only for more advanced countries compared to less advanced countries which have different priorities. So, it's another reason for considering both agendas as really complementary and interlinked and not opposed to each other.
Thanks, Mathilde. And continuing with you, how do you see this challenge of scaling up the initiatives on green inclusive finance and really achieve the mainstreaming of green culture across the sector?
Yeah, so I will mention two main challenges. The first one related to your first question. Actually, if we consider the green agenda as part of the social mission of financial institutions only, I think it's an obstacle. Seeing the social objective as a main driver or as the only driver of the development of green inclusive finance will be an obstacle at the end, because it means that only socially committed institutions will get involved into the development of green inclusive finance products. But what about the others? What about all the other financial institutions which are not so socially committed? The development of green inclusive finance cannot be driven only by the social mission of financial institutions. And maybe just to give an example, so as you mentioned, the fact is that financial institutions are also threatened by climate change. There is a risk for their portfolio. It's not only for the end clients that it's important to develop green inclusive finance products, it's also for themselves to make sure they will be able to deal with climate change and to face the consequences of climate change. And so one of the obstacles is a lack of awareness of financial institutions regarding these climate change effects. A very concrete example, we supported a project in Latin America to develop climate insurance, index-based insurance for agriculture. And the first step was to do a study to show the financial institutions that they have an economic advantage of insuring their portfolio. It's financially more interesting for them to insure their portfolio against climate change risks than not doing it. So we did the studies, we showed the figures to the financial institutions, but because some of them are for now not so much affected by climate shocks, they finally decided not to insure their portfolio. The only institution out of 4 which decided to do so was the one in Nicaragua, so the one which was already the most affected by climate shocks. For the others, the climate shocks were too hypothetical, and they didn't see the consequences, the concrete consequences, so they decided not to insure their portfolio, even if it was more financially interesting for them to do so. So the lack of awareness of financial institutions is a big challenge to scale green inclusive finance products. Another big challenge that you mentioned already is the necessity to get on board many different actors. So indeed, financial institutions need to develop their green inclusive finance products, but there are a lot of other needs to make sure that this financial product is efficient. For instance, if we get back to our example of agricultural products, agricultural loan, a small producer, of course, needs a specific financial product to manage its activity in climate-smart agriculture, but they also need capacity building, they also need specific inputs, specific seeds, specific equipments, and it means that other actors around the end client need to be able to provide these complementary services or complementary products. So the financial institution has to work with all these other actors to be able to offer an efficient green inclusive finance product, which is a challenge for financial institutions to be able to deal with all these other actors.
Thank you, Mathilde. I think we have a lot to think about on this part. But Michele, I was wondering, scale is crucial for insurance too, no? Probably even more than for other financial services. So how can insurance providers ensure sustainability of the initiatives and the necessary outreach to actually be able to increase resilience of the people they are supposed to protect?
Yeah, so I'll break the question in two. So in terms of scale, so where are we today in covering microinsurance? So if we look at the landscape report from the Microinsurance Network, which was just published 2 months ago with data from 2022, it points a gap of 75% in protection of the world's of the world's populations against daily risk in natural disaster. So, and that means that in the countries that were part of the studies, I think it was 36 countries across Asia, Africa, and Latin America. It showed that 300 million people had some sort of microinsurance. And that is actually an improvement. When we last conducted that study 3 years ago, in 3 years before, in 2019, we were just above 100 million, but again, this is not enough. And one of the main obstacles to achieve that scale, well, we have obstacle on the supply side, and we have obstacle on the demand side. On the supply side, we obviously need an enabling regulatory framework. On the demand side, we have multiple challenges. If we think about a customer, a low-income consumers across these geographies, there is typically a misunderstanding about insurance. At best, they don't know about insurance. At worst, they don't trust it. And then there are fundamental obstacles in terms of distribution and payment. If we look at traditional insurance distribution, this is done by agents, brokers, and banks. And by definition, these three channels are exclusive. They do not include the rural population across emerging countries. And in payment, well, traditionally insurance is collected via a credit card, a bank account, and this is always not available across the emerging market. So I'm going to give 3 examples of partnerships which we think have been successful to achieve the scale. These 3 examples are all from members of the MIN. In the first example, it's a collaboration in between a donor and the governments. And the second example is a collaboration in between inside the private sector, so in between an insurer and a distribution network. And the third example is an example of collaboration in between donors, an NGO, and the private sector, as in an insurer, a distribution networks, and also a technology enabler. The first example I want to bring up is the R4 program of the World Food Program. And I'm bringing it up here because this is a climate risk insurance that combines risk management with risk transfer. So this works both at the community level by providing microinsurance to local communities, but also at meso and macro level because they work with local and national governments to purchase insurance to complement existing social protection system. This program, the R4 program, has been already deployed in 21 countries with 3.8 million people covered. The second example is a partnership in between Blue Marble and Nespresso. Blue Marble is a federation of insurer, reinsurer, and insurance brokers focused on microinsurance. And they started working with Nespresso to protect coffee farmers and their crops in Latin America, Asia, and Africa. And the third example, last but not least, is one closer to our home in all senses, because it's a partnership in between Democrats and Canada, which we have worked on to provide migrant insurance to migrant workers here in the UAE. As we all know, one of the effects of climate change is increased migration. So it's important that we test and deploy effective risk management tool for migrants. So this program worked from 2018 until 2020. It was a partnership in between ADA, Democrats, with the support from a donor, IFAD, and also a collaboration in between an insurance company, AXA, and several distribution partners, a digital bank for migrants called RISE, and a money transfer operator. So what we did with Democrats is a technology enabler in between. If you think about it, migrant workers, they come to work, for example, to Dubai to protect their families back home. So linking insurance with the remittance is a logical and natural product, right? Unfortunately, around the world, there are not that many migrant insurance programs which have achieved scale. So what we have done, in the example of the money transfer operator, when a migrant worker enters a remittance house to send money back to their family, when they pick Hello Paisa, which is one of those money transfer operator, the moment they hand in the money to the agent, the insurance becomes active because Democrats is integrated with the system. So and the sender of the remittance becomes the insured, and the receiver of the remittance becomes the beneficiary of the insurance product. That this product was a combination of accident insurance and disability, because according to research that ADA had done with migrants in the UAE, these are two of the main worries for migrants. What happens if I have an accident and I cannot work anymore? What happens to my families back home? So, so at the moment the transfer is done, the sender receives an SMS. I'm saying you are insured, this is your policy number, and this is what you are covered for, and the period of your insurance. And at the same time, also the receiver of the remittance receives an SMS, and this person is normally in their home countries, saying your family member nominated you as a beneficiary of their insurance policies. If something happens to them, this is how to claim, and there is a link. The person clicks on the link, fills in a simple form, upload a couple of pictures, and the claim is submitted. And once that claim is approved, another remittance transfer is done as a claims payout.
Okay, thanks, Michele, for the interesting explanation, because I think it's important to understand how the process actually works. Jasper, and turning to you, and just to end the cycle on the question on scale, so how important is scale in outreach to EIB, and how do you approach it in your programs?
Yeah, it's very important, whether we talk about green inclusive finance, green agenda more broadly, or even the sustainable development goals, not financing and pursuing the sustainable development goals. So it's very important. I think it's like the billion-dollar question, or maybe I should say trillion-dollar question, since a few years ago people started talking about billions to trillions, no? So how do we get there? There's not one single solution, but we also know that crowding in is extremely important, crowding in the private sector, and the question is, how do we do it? Now, we've done it, but we need to do more of it, and I think it's about finding the right structure and the right instrument. So blended finance type structures and maybe risk sharing and guarantees can be one such way of crowding in the private sector. So it's obviously a caveat there. So maybe I should mention with regards to microfinance, just the sheer number of loans, which makes it quite resource intense to handle. So it's the larger the loans, the easier, but we've done it also in microfinance, and it's possible to do more of it. And the other caveat would probably be to do so, we've had partnerships and donors mentioned several times already. We cannot provide concessional funds from our own resources. So when I talk about risk sharing or first loss protections, it needs to come from partners, from donors. So we need to mobilize more donor funds for these type of structures and instruments. And we also need to, we've heard capacity building mentioned several times. We need TA to build capacity, build awareness, and maybe interest rate subsidies, etc., to incentivize. So not as one single simple solution, but crowding in blended finance type structures and working with partners and donors to do more of these very interesting structures and operations that we've already put in place.
Thanks. And you mentioned TA and technical assistance, and this is part of EIB work as well. So what type of TA do you think the financial service providers need to implement a green strategy and provide green products and services? And how do you, what kind of criteria do you look at to define what is a successful TA program for EIB?
Again, if I'm allowed to go a little bit larger again, TA, again, it comes up what you talk about inclusive. So my role is really about mobilizing funds, working with donors and partners. So TA comes up, the need for TA is huge, where there's upstream project preparation, where there's more downstream capacity building and project implementations. And so in green and inclusive finance, it's really about first, making clients understand what do we mean by green. So it's, we need to be clear on the eligibility criteria and also make them work for financial institutions dealing with smaller, less sophisticated clients. We've heard about the social mission, and now we're adding a green mission. You don't want to overburden your partners or the clients. So what do we mean by green? And then it's also important to, as I understand from the front line, it's like there is already quite a lot of green financing and green inclusive financing being provided, but maybe the financial institutions are not so much aware of it. So TA to actually, technical assistance and advisors, to actually make them understand what do we mean by green and what do they even already have in their portfolios, like solar, wind, biogas, etc. So there is already green activities in portfolios. The financial institutions are doing it to a certain extent, so it's about finding that and build on that. And once you've established where they are and what they have, you can also then see what their capacity is to go forward and their willingness to go forward. So first identifying what's in portfolios, and then, of course, we've heard it already mentioned here about capacity building, bridging the information gap, marketing of products, etc. So that's where I say the TA is needed.
Thank you. And Mathilde, Ada has a long experience on TA, and I'm thinking of programs like, for example, Snoop that you coordinate, and which aims at increasing the productivity and resilience of smallholder farmers by improving risk management and promoting sustainable, climate-smart agricultural practices. So what is your view and the view of Ada on the role of TA for the financial service providers and their clients, and what is your experience?
Yeah, so there is a lot to say, but actually trying to answer quickly and efficiently. So indeed, as we said several times in this event, capacity building, technical support, technical assistance is key. Everyone agrees on that, but what we don't say is that capacity building, technical assistance is in most cases financed by public resources, because capacity building is provided by non-profit organizations in general, or when it's provided by, individual consultants or consulting companies. Usually the recipients of capacity building or of technical assistance are not able to pay for it entirely. So it means there is always a need of public funding for capacity building and technical assistance, which is one of the challenges for the scaling of green inclusive finance if we talk about this topic here. because public resources are limited. And on our side, we try, and actually it's been years that we've been trying to find sustainable business models to provide capacity building in a viable way, but it's not easy. So just to come back to concrete examples, capacity building for end clients or financial institutions. Indeed, clients need capacity building, not to be aware of climate risks anymore, because now what we see in the field, in the projects we manage, is that vulnerable populations are very well aware of climate change and of the consequences on their daily activities, but they need capacity building and technical support to either learn what are the climate smart practices when we talk about agriculture. They don't know what are the practices to apply in the field to make their activity more sustainable. So they need technical support to do that. They need also to learn how to use the solar equipment. We saw in the example of EIB, the solar water pump. It's indeed something we do as well to develop financial products to make people able to buy such an equipment, but they need to learn how to use it. And so they need technical support to do it. Then when we talk about financial institutions, as we said, this time, they need to become more aware of climate risks. So there is a need of capacity building to make them more aware, to identify which part of their portfolio is already green or could be greener. So it means identifying the portfolio which activities are threatened by climate change, for instance, what could be the way to make these activities more resilient to climate shocks. So for that, they need to receive support. And finally, of course, to develop financial product, green financial products, they also need support. For instance, if we come back to the solar water pump example, first, the financial institution needs to know how much it costs. Then the financial institution needs to analyze what it will change in terms of production volume for a small producer if they use a water pump, the change in terms of production volume, but also in terms of production quality, in terms of production costs, in terms of revenues for the producer. So taking into account all these aspects, how long will it take to amortize the investment in a solar water pump? So what should be the minimum and maximum amount of the loan which is being developed? What should be the interest rate? What should be the duration? How many clients should be served to make sure this loan is financially viable from the financial institution perspective? And to do all this analysis, financial institution needs support, and someone has to pay for this support. This is one of the challenges. Then last thing maybe to talk about the role of TA. You mentioned the program we coordinate, which is called SNOOP, and indeed in this program, the idea is to use TA to build capacities of local organizations to be able to attract more private investments. So in this case, TA, which is usually financed by public financial resources, is used as a way to attract more private capital because it's used to reinforce these institutions and to make them more investment ready. So the idea is to use TA as a kind of blended finance mechanism, finally. So we'll see if it works. The objective is to analyze the effects of this program, but this is the idea, and actually TA can be used to leverage more private investments as well.
Thanks. And just a very quick follow-up. You've mentioned the raising awareness and TA for the staff, talking about the implications on portfolio. But do you also have TA in terms of raising awareness about the own institutional climate footprint and how internally they can be an example also for their clients in terms of how to save energy, be more environmental friendly, etc.
You mean for the financial institution? So actually the TA we provide is really focused on the analysis of climate risks for the institution and the development of financial products for the end clients, not so much on how to manage their own climate footprint or environmental footprint. But other organizations are doing this type of support, so we focus on a different type of capacity building and technical assistance.
Okay, thank you. Michele, maybe change a bit let's leave the technical assistance for now. So you are part of the board of MIN, as you said, but also co-founder of Democrons, a technology company. What is the role of technology and innovation in the promotion of green inclusive finance initiatives and green insurance initiatives to help institutions actually provide the greener products and help their clients?
Yeah, thank you. I'm not gonna move too far from technical assistance. I think it's still part of the topic. But two questions. I think innovation and technologies are key to reach the issue of scale that we haven't discussed earlier. But they're both a mean to an end, right? They're not the end itself. So what I mean by that is that the financial institutions, especially insurance companies that we work with a lot, sometimes they would say, oh, let's do innovation, let's do something new, right? Something different than selling traditional products via traditional channels to customers who don't really need insurance, but they're profitable. So they need to have the idea clear, and sometimes what Mathilde says, they don't even know. They need to be educated on that, right? And sometimes you really need the technical assistance to push them to do something, because with many of our projects, at least at the beginning, you know, when we first did the migrant insurance program, there was no blueprint. No one had done migrant insurance at scale before. So we had to test and learn. It took us many years to find the right product and the right channel and the right value proposition and the right go-to-market to achieve those results I mentioned earlier. Now, this was possible thanks to technical assistance of donors and NGOs, because the private sector doesn't have time to invest, 3 years of their time on something that, in the end, what they care about is the amount of insurance premium that goes in their books. If we look at the amount of insurance premium that pilot went in 3 years, they could have made it in a couple of days with their traditional insurance product. So yes, technology is what actually enables scale. I'm going to bring again 2 examples of things that we did. One around the topic of distribution, and one around the topic of payment. So in terms of distribution, as the panel has mentioned, one of the most common channels in microinsurance is bundling microinsurance to loans from microfinance institutions. Now, I would argue that yes, this is a good entry point, but selling credit life, so insuring the amount of the loan, doesn't really cover the policyholder. It covers more the microfinance institutions. So yes, again, it doesn't solve our problem. So and to do that, the majority of microinsurance via MFIs around the world, they're managed on Excel, because there is not much interaction and there are not that many claims, so you don't really need a technology enabler. Now, what we did in Egypt, we work with 6 of the largest MFIs in the country. We have approximately 1 million, so 1% of the country insured via these programs, and we would offer through our insurance partners, obviously not ourselves. We would offer not only life, not only the credit life, but also health, and that health insurance product that covers both the main policyholders, but also their families. It covers them in the case they go to a hospital, in the case they spend at least 1 night in the hospital for whatever reason and whatever hospitals. Now, you can imagine we're talking about tens of thousands of claims for an average claim amount of, which in current dollars term, with the pound depreciating, is about $10 a claim. So you cannot have an offline or, an Excel-based program, so with millions of customers and tens of thousands of claims for $10 each. So there we have applied the Democrats platform, and with Democrats platform, what an insurance company can do is that the more data we have and the more we train our platform, so that claims that comes from a whitelisted client, doctor, or hospital, and that means a client, a doctor, or a hospital that hasn't issued more than the average number of claims of the whole programs. If the claim amount is below a certain threshold, then that claim can be paid automatically without having someone to look at it. That means it's cheaper and more profitable and more sustainable for the insurance company to run, and it's faster for the end customer to receive money when they really need it, because clients use that money to pay for hospital bills or to make up for loss of income. The second example is an example that we have in the Philippines, but it's very common around the world, is to solve not only the distribution channel, so how to reach a microinsurance customer, but also how to collect insurance premium from them and how to pay out an insurance claims. So we work with digital wallets. The digital wallets, they're very common across emerging markets, and they're used to send money peer-to-peer, or they're used to pay for rent and groceries and so on. And in this case, we would sell insurance on the platform to the customers of the wallet. And that means that from the wallet, a customer can not only pay money to their friends or the landlord or their stores, but they can also buy insurance and pay insurance using the money on the wallet. And then also at the time of claims, you can, if the claim amount is not, we're talking about a simple low ticket programs like the one in Egypt, you can pay out the claim directly on the wallet.
Thank you, Michele. And I think we're going to go to the hot topic of the COP, the partnership side. But Matilda, and I'd like to start with you. And you mentioned before the need to work also with other stakeholders and thinking about, for example, impact investors and regulators. And the idea that you need an enabled support system and an accountable support system to be able to really mainstream a green culture. So how do you see these stakeholders, and particularly impact investors and regulators, and their role in enhancing or inhibiting the green agenda?
Okay, so to answer this question, I'd like to show the third slide. Yes, just to help understand the role of each actor in this big ecosystem. So what we talked about a bit earlier was at the right of this diagram. So the end clients, the financial institution, local financial institution financing the end clients. And so we already mentioned the role of the other actors in the ecosystem interacting with end clients. So these capacity building providers, the equipment and input providers, which are usually SMEs, small or medium enterprises, and this is important to answer your question. And the market access actors, so basically actors which facilitate transactions for the end clients. So if we take again the example of small producers, a market access actor using technology, for instance, is a digital platform which enables producers to get access to inputs through the digital platforms or to sell his products to buyers through the platform again. And so again, this type of actor in the market is a private actor in general, a small or medium enterprise. And so to get back to the role of impact investors, so what is the role of these investors in this ecosystem? Actually, we talked about the necessity for local financial institutions to receive TA, capacity building, to develop the products, but they also need specific credit lines to develop these products. Actually, they need to be incentivized a way or another to scale this part of their portfolio. And one way of incentivizing them is to provide them specific credit lines to be able to finance the green inclusive finance products they develop. So this is where the impact investors have a role to play. They can provide these specific credit lines to local financial institutions. Actually, not only impact investors, which are usually international actors from the private sector, but other financial actors around or up in the financial chain could play this role as well. The national refinancing funds, for instance, in the countries of intervention, or even local banks financing financial institutions. So all these actors could provide specific credit lines to incentivize local financial institutions to develop their green portfolio. So this is one thing. The other thing about regulators, who are even upper in the chain, is indeed their role is important to define what we call green. As you said, we need to have a common understanding of what is green or what is not green. And this is one of the roles of the regulators, to avoid greenwashing especially. And they do that by developing what we call taxonomies, which are basically a classification of what are green activities, which could be eligible to green finance and what is not. So this is one of the roles of regulators. Another role is also to develop, design, implement incentive policies for all these actors down in the chain. Tax benefits, for instance, but also guarantee mechanisms, as you mentioned. So the idea, of course, is that public resources, again, are limited, so should be used in a way to be able to leverage more private financial resources. And so different types of what we call blended finance mechanisms are useful for that, which includes these guarantee mechanisms, first loss mechanisms, or even TA, which can be used to leverage more private capital. So, yeah, I guess this is what we can say about the role of all these actors. And again, here, when we see this ecosystem, we understand why it's difficult to scale green inclusive finance. It's because all these actors need to be committed and involved at the same time and to work in partnership, as we said. But of course, we all agree in theory, but in practice, it's very complicated.
Thanks, Mathilde. And Michele, how does it work in the inclusive insurance sector? Is there an enable system of green insurance?
Yeah, it's quite similar to what Mathilde just mentioned. So when it goes again that topic of doing innovation and partnership in a way that is not the traditional way of doing insurance. So transparency and trust is key. And microinsurance network work closely with the Access to Insurance Initiative, which is a network of insurance regulators around the world to organize consultative forums. And in these forums, we put together the regulators and the private actors to share openly what the challenges are and what are these ideas. As in, I want to offer insurance to migrant workers via the remittance houses. Can I do that? So, and by doing that, not only a local player get clarity on what they can do, but also other players around the world and other regulators can take inspirations for new initiatives to be done in their own countries.
Thanks, Michele. And going to giving the last word on partnerships by the head of partnerships. So I think we are going to be good. So what is the perspective of EIB on partnerships within and beyond financial institutions, financial inclusion sector, and what is the role of EIB on this process?
Last word on partnership at the last day of COP. What a privilege. I overheard a colleague the other day saying, on the question whether the word of partnership was overused. And he said, yes, maybe it is, but it cannot be enough emphasized, overemphasized. And I think that's correct. I mean, as an EU institution, we are very dependent on partners on the ground. I mean, we are increasing our local presence now with the EIB Global, but still we are very dependent on partners. And of course, as the EU bank, a partnership with the Commission for concessional funds or other ways, policy alignment, etc. And under Team Europe, other member states and national development banks. So partnerships are key to us, and we all need to work together. And as Mathilde was saying, the picture showed it, no? All the different actors in the ecosystem. Problem of reaching scale, but we need to work together. So again, it cannot be enough emphasized the importance of partnership. And maybe just to bring it back to what I said before on possible ways of crowding in and possible ways of reaching scale, working with the private sector and working with donors. I mean, we're all based in Luxembourg, and we work very well with Luxembourg also as a donor in financial inclusion and other sectors. And something really we built up over the last several years and want to increase our donor relations and donor outreach to, for mobilize these concessional funds then and technical assistance for capacity building, etc. So yes, it cannot be enough overemphasized and something we will strive to build better and stronger relationships going forward.
Thank you, Jesper, and I think we are perfectly on time to what we had planned. What is that you want them to retain and to take with them when they go back to their own daily tasks and their work in the sector? And I don't know who wants to start, but
So words of wisdom.
Mathilde, I think you are a voluntary without knowing.
Okay, no problem. So one message. So actually, we cannot rely only on inclusive finance institutions to scale green inclusive finance. It's important to get on board other actors interacting with the end clients first. And also the other actors upstream in the financial chain. So not only the inclusive finance institutions, but also the impact investors, the local refinancing mechanisms of funds, the local banks, and above, again, the regulators. So the idea is to share the same objective and to work together to reach this objective, and everything cannot depend only on local inclusive finance institutions.
Okay, thank you. Michele?
Yeah, actually, while walking in to the COP, I don't know if you guys have seen it, I saw it on the wall on the left. There was a writing saying, let's turn idea and decisions into actions. And I think it's a good summary, right? Especially now at the end of COP, right? We talked a lot. We agree on several things. We're here today with a common objective, which is to include more people in the financial sector. Now let's talk less and do more. As in, let's try to do some more things, some more of these unconventional partnerships in between governments, donors, NGO, and private sector. The majority of them will fail, and that's okay too, right?
Okay, thank you. And Jesper, final
words of wisdom.
Final words.
No, but also be a little bit more philosophical, broader. Perhaps just speaking to clients, walking here this morning, and as the text is leaking out, it starts with ourselves as individuals. What can we do? And I think when we talk about inclusive finance and green inclusive finance, it's step by step, loan by loan. No, there's no simple silver bullets or solutions. So it's really continuing to much of the very good work that's already being done, build on that, and try to close this information gap. Educate clients. And as my colleagues preparing for the panel and discussion today said to me, it's you have to teach clients. Often the pushback is from financial intermediaries, financial institutions, not necessarily clients, but help and educate financial institutions, that climate loans are not more risky than the climate risk itself. So I think that is key. And to do so, again, we need to partner and we need to educate and close the information gap.
Thank you, Jesper. And I will just want to finish with a couple of notes. One is that something that I tried to pass in the beginning, that there is, and I think, Jesper, you mentioned this at some point, or Michele, that there is already a lot being done, but it's sometimes done, as Mathilde was talking about, as a niche issue. So people develop green products, they start doing a solar loan, but they don't really have a clear idea of why they're doing it and what is the objectives in terms of increasing resilience of the clients and contributing to the mitigating and the effects of climate change. The second one is that, and it's been also a message of the COP, we need to do much more on adaptation, and we need to do much more on adaptation on the inclusive finance sector. There are a few experiences. There is a recent research from CGAP trying to understand exactly what's being done, and it came out, I think, a couple of weeks ago, and it's something that it's a good guide to try to understand where we are, and exactly what is being done in terms of adaptation, by whom, and what can be done. The other or similar call is that go check the green map at the European Microfinance Platform webpage. You can find there more than 30 examples of what institutions are doing, what kind of products, what kind of strategies, what kind of challenges, and how they overcome them. And this is, I think, the beginning of the sector. I think the sector is trying to close the information gap. The sector is well positioned in terms of the relations with the clients and how we can try to bring all these things that we've talked about, the capacity building, the partnerships, the other stakeholders, the other experience of other sectors that have been doing it as well, and try to actually do something and go to action, as Michele was saying. So thank you to the three of you. Thank you to all watching online and those here. And we hope that we've brought a bit of what Luxembourg is doing on this, but it's not only Luxembourg, it's really much broader than this, because although some of us are based in Luxembourg, we work across Europe and the world. So thank you for being with us, and have a nice day.